Thank you all for being here. Yeah, I just realized I never introduced myself. My name's Antonio, and I'm not yet sure what I am, I guess, but sometimes I do interviews with people from the natural resource space, and I upload them to a small YouTube channel called Resource Talks. So that's I guess that's pretty much it. I'm here today with Fabi and Pete to talk about the investing in the future, investing in net zero future, in the net carbon zero future, critical minerals, uranium, and stuff like that. So thank you both for being here. Yeah, pleasure is all mine. I know the Germans don't like losing too much time, so why don't you tell me who are you and why do you think you're worth the time?
Oh, ladies first. Thank you. So my name is Fabi, and I run a daily newsletter on basically what happened in mining today. It's called The Next Big Rush, which means that I have to absolutely be entrenched and in the know of what is happening with mining legislation, different things that are happening, drill results, M&A activity. So I publish that. It's free on thenextbigrush.com. So I guess that's my pitch. I also help a few companies that I really like and am willing and able to buy their stock to help promote them to investors that want to get in deals that are cheap and that I think are going somewhere. Right. And I'm an investor first and foremost, so my own money on the line.
That last part is the same for me. So I'm Piet Vanrusselt. I'm Belgian. So my link is actually my uncle worked in Congo. Pretty easy link there. For the biggest copper mine there, the 10K mine. It was part of the Lundin Group and then Freeport and so on. So I was starting to read about this industry since I was 10 years old. So that's now 25 years. So I lost a lot of money, but I also made more than I lost. So that's pretty okay, I think. And the last 10 years, I tried to write more and more on Twitter. I think the most people know me from there. I try to do like you do, like every day, check the news releases, what is interesting, what is playing on the macro side, try to share that, try to build a network, which is pretty important.
He doesn't try, he succeeds. He's very good at what he does, by the way. So
thanks for that. So even these 2 days, somebody asked me, did you buy any of these companies? I only own one here. But the idea is always to know the people, to know the projects. And once that news release comes in next week or next month or in 6 months, then you already have that small advantage of knowing who to talk to or what the project is about or what the cap structure is, and you can make quicker decisions, hopefully. But that also means that 80% of your time is not lost because you make connections, but it's hard work to go through all of these. So coming back, I think 10 years ago I started with Twitter, then also a bit of the website just to collect my thoughts. And then a private investor, of course, in private placement and in the companies.
All right, good stuff. We're supposed to be, or Kai told me that we're supposed to be talking about critical minerals today, but that's sort of it's a vague term, right? Like, what is it physically critical? Is it critical because the government said that it is? What are critical minerals, I guess?
So
what's your take?
I can start, yeah, because it's a German audience. I said, okay, critical is European, sorry for the English here and the Canadians, but for the European Union, they have since 2011, which is not that long, they are keeping a critical mineral list, and that would start with 14 metals, sorry, and now we're at 37 already, so it's growing every year. And the fun fact is that there are 2 that they added, which are not critical, but they added it anyway, and that's nickel and copper, because they're so strategic. So they didn't meet the criteria, and there are 2 criteria. It's economical importance and supply risk. So you can read 1,370 pages of studies, all tables on where do they use it. Copper is not on that list, because the supply risk is low, because you can get it from, well, anywhere in the world, but you have other metals like niobium, tin, maybe where you have only a few deposits or only a few countries that have all the pool. Also on the processing side, almost any metal is dominated by Chinese processing facilities. Because what we did in the last 50 years, we said in Europe or in the West, that's a very dirty industry. Let's move that to China in this instance. So China is really strong in that regard, and now the EU woke up pretty brutally also with the war and the, like you know very well here, with the dependence on Russia for the gas. And then they saw, of course, what we were saying for a few decades. It's the same for other metals. Well, it's not a metal, but so critical. Sorry, so they define it as we need it, but we don't have it.
Yeah, and
in the ground.
I think initially, I think the idea was to get minerals and metals that couldn't be easily replaced by something else, because the supply of it became very critical, especially with COVID and the war. When we actually read what the government, especially in Europe, is putting out, you find out that it's more towards them pushing an agenda of net zero, aerospace, and also defense. And so anything that could threaten, those three areas can actually become what they would call a critical mineral. And they've actually written up some law that they're trying to pass, hopefully very soon, that will, quote unquote, force some of that stuff to be extracted, processed, and also recycled within Europe. So we're talking about going from negligible amounts of all of these minerals, including rare earths, that are currently mostly coming from China, to be mined within the European Union. And they want a minimum of 10% of everything that's used, in the critical mineral list to be mined. So 10% to be mined within Europe, 15% of what's recycled to be recycled within Europe, and I think 40% to be processed within Europe. 40%
by 2030.
By 2030. So you can do the math on that and probably come to the same conclusions that we have, that it's technically impossible, but they will probably keep trying. And as they keep trying, we're probably going to be making bets towards companies that have exposure to Europe or other places as well that can benefit from that.
I'm not sure I could do the math, but I'm sure some people could. I've been seeing some of that math, and it's funny that copper is not considered a critical mineral, because it seems like we are running out of new projects, economical projects at least, at the current prices of copper. So what say you about copper not having the critical mineral?
So for the European Union, they put it in the same basket as a strategic one. Yep. So all the actions that flow out through and all the thresholds she was talking about, Fabi, they can benefit from that. So copper and nickel, they included that. What it would mean is, okay, the European has a Green Deal industrial plan for countering let's say, the American version of the Inflation Reduction Act that's coming. And they want to spend $270 billion, or euros, sorry, in this case. And what that means for mining is, they know, and if you read the reports from them, they know that we don't have that much material here in the ground, or not, at least not enough to get the full 100% what we need. So they're putting a lot of emphasis on risk mitigation, trying to diversify supply chain, trade agreements with Latin America, with Africa, with Australia, anything, if it's not China at the moment. And what it would mean for mining in Europe, the 10% extraction, is they're going to select strategic projects, and they're going to fund those and try to streamline hopefully what everybody's hoping, streamline the permitting processes, shortify them, or short them, simplify them, and make them predictable. Because that was an investor want to know if it's 1 year or 2 year. If it's 2 years beforehand, that's manageable. But if it's 1 year, you always have the delays, what you see in Canada and Australia often, then you just get the frustration. So you want to have predictability, you want to have a clear process, and of course, not that long. So yeah, that's going to be, hopefully, if you have strategic projects in Europe, that's hopefully the way to go.
Canada is not doing the same. Canada does not consider copper as a critical mineral, I think.
Well, in Europe, they update the list every year. So like I mentioned, they went to 14 to 34, so maybe Canada will see the light in a few years.
Okay. Does that mean something to the companies that are looking for, in this case, copper? Like, what would it be, in some case, or in some form, beneficial to like copper explorers if it got added to the critical minerals list?
I think that wouldn't really change very much. The fact that copper is such a deep market and so liquid, quote unquote, at least in our world. I think there's enough demand, for copper within the private sector that I don't believe that we need, public policy push towards copper. I think that, in the same way that we had the crisis of 2008 and the least obvious new equipment to be had was the iPhone at the time, the first very popular smartphone after the BlackBerry. It still happened, right? The technology came and people started to buy the new thing in droves. I think that whether we go through a recession now or very soon, I think that EVs are the way that the consumers are choosing to go down. And with that, I think, the private sector is just going to be forced to just consume ever-increasing amounts of copper.
All right. I guess we could spend a lot of time talking about the macro and all these things, but let's maybe shoot straight to the point here. Get into your head, if you only had to pick one sort of critical mineral or strategic metal, whatever you want to call it, to invest in for the 2020s and maybe even longer term than that, what metal would you pick?
Go ahead.
It's a very difficult question because I was thinking, let's take a niche metal, because Mother Nature is very cruel, and the niche metals are often the hardest ones to recycle and the hardest ones to substitute for another one. If you take tin as an example, which I know very well, is you only have a few cents of tin in certain products. So it's very hard to go back to, let's say, mixing them out. A great example for recycling is if you have coffee and you put some milk in there, that's easy, but you can never get the milk back out of the coffee. So if you an iPhone or a BlackBerry has 50 metals in it, but it's almost impossible to get most of them out. And what they're saying also, the recycling for let's say the EVs and the batteries is it's going to be a lower number than many people hope for, and it's going to be a long time before the first EVs en masse are coming back in. So you have a supply gap there. So that's why I also like lithium. But I'm not going to pick that one. I'm going to go for the good old Dr. Copper, because it's so widely used. Even if you substitute it in one application, you still have plenty of other, let's say, applications. And what we all know is it's getting, with inflation, it's getting way too expensive almost to build new mines. So what they're doing now, or in the last 20 years, is just expanding the life of the current ones. And with the whole boom of the green energy and the clean tech, we need a lot more copper. So there's, for me, a big gap between what we want and how we're going to get there.
All right. What about you, Fabi?
I love uranium. I think this will come to nobody as news. Absolutely love uranium, and what's happening sort of in the fundamental thesis with uranium that you don't yet see in the spot price is that you look at the producers, and a lot of them are, as you know, Antonio, pretty booked up. So utilities are coming back to the table and buying lots and lots of U3O8. I don't want to say desperately quite yet. I don't think we're quite there yet. But last year we had, I think, 110 million pounds of uranium purchased in the long-term contracts. And this year so far we've had 88 million. And this is for 5 months of the year only. So you see this happening for the first time ever in a decade. Utilities coming back to the table, contracting long-term, and if the books are filling up fast, you're a producer, where do you go next if you're a utility and you need to be stocked up full of uranium and other nuclear fuel products? Well, you're going to go to the spot market. That's going to be your only option. But then in the spot market, what's happening is there are new financial players coming to the table, knowing of the supply-demand imbalances. So you have Sprott coming in. They've already bought, I think, almost 50 million pounds in the last couple of years, or 18 months, I want to say. You have a new vehicle out of Switzerland who they're raising, I think, 100 to 150 million dollars to also come into the spot market to, buy up the material. You have the Kazakhs with, $500 million fund as well for that. And there are other funds that are coming into the spot market of uranium. And just one last thing about uranium, because I could talk about this for hours, so you're going to have to just excuse me for a second, is a lot of these companies that are contracting right now, so Cameco, Kazatomprom, et cetera, what they are currently doing is they have seen the spike that happened in the last bull market, and they kind of don't want to miss out on, you know, the potential explosiveness of uranium. So what they're doing is they're tying up their contracts to the spot price, at least somewhat. So they will do a mix and match of a certain price in the future, but part of that price will be based in whatever the spot market is within that period of time when they come to deliver the U3O8, which means that if I were a producer and I was writing those contracts and I was promising a certain type of or certain amount of material in the future for the next, I don't know, 7 to 10 years, if the spot market gets illiquid enough, there comes a point where it is worth it for me to buy into the spot market to make my whole book look a lot better. I am not saying that they will do that. However, it is in their best interest to actually bid up the price of the spot market for their whole book to look much, much better. So that's me for you.
Yeah, that's a good point. Specifically with some of the OECD producers of uranium, like Cameco, they only have about 15% of their licensed capacity now available to be contracted, at least of their tier 1 capacity, and the tier 2 capacity is much more expensive, of course. But uranium is like, you picked a tough topic. That's like we need hours to talk about this. Yes. So it's a tough market too. It is. But it seems like you're having a good time, so let's change that. I don't like it. Let's change it up. And what about if you had to let's not call it short, but what is sort of the last metal that you would pick if you wanted to invest in this net zero carbon future?
Can I say uranium?
Yeah, please.
No, I'll join you when it starts moving, because I've been waiting for 10 years, and it's for me hard to see with Kazakhstan the black box and uranium a strategic metal, and they don't say all the inventories. So I know at some point it's going to catch up, but I was here 2 years ago, and it was the same discussion, and 10 years ago it was the same discussion.
I've made lots of money in the last 10 years,
well,
man.
That's great.
You haven't been watching my stuff.
Next gen. But is anybody from the companies looking for cobalt? I don't think so, but it's my least favorite one. One, because every engineer and every automotive company is trying to engineer it out of the batteries. And secondly, mainly for human reasons, because now say 80-90% is coming from Africa, from artisanal mining, via Glencore and others. So it doesn't feel right. So if you can make a discovery in cobalt not in Africa, or at least, or maybe in Africa, but in a let's say EHG-friendly environment, then I'm all for it. But also because they're engineering it out, I don't see the best future. And I think in the last year, the price is also already going, down. But there are plenty niche metals nobody likes or is not talked about, but cobalt is maybe the biggest one I don't really see going forward.
You don't like it because of how we're getting it, or also because of the potential that it has in terms of supply and demand dynamics?
Yeah, both.
Okay, both. Okay. What about you, Fabi?
Cobalt is probably the right answer, but I am not really sure I have a least favorite. You've seen some of the nickel prices go down a lot with Indonesia bringing a lot of supply, but it's debatable whether that nickel can actually be used in EVs due to its quality, et cetera, et cetera. So I think I understand the nickel market the least, probably, but yes, cobalt is being engineered out of batteries. At least they're trying to engineer it out. The way I see it currently, with the projections that we have, we're going to need more of everything that is within that critical minerals list. So there's nothing that I don't particularly like. Then it becomes a case-by-case basis with companies.
You had a great opportunity to say tin right there, by the way.
I am not going to say tin. I'm starting to get interested in tin. So. No,
it is. The prices come down a lot too. You made a good point about cobalt, because sometimes you would see the companies, or about nickel and cobalt. You see some of these battery metals companies getting them out of the ground, and they're not the exact composition or not the exact grade or whatever it might be. And then eventually they have the product, they did, you know, all the efforts to take it out, but it's almost worthless. So how do you navigate around that? Like how do you get exposure, Pete, for example, to some of the metals that you mentioned there? Are you focusing on the explorers and then sort of ride the first wave up? Is it the producers, developers? What are you looking for?
Yeah, just to come back first to the quality of the ore, I think it's very important. And if you take lithium as an example, everybody say, yeah, it's everywhere in the world, so the price will come down eventually, which I agree at some point. But there's a lag of 10 years at least, like we never searched for lithium. That's why in Quebec you can see that pegmatites are just sticking out of the ground because nobody ever looked at it. So that's great choice there. But you also have the battery grade material you need to get, so you need the quality of the ore, and that's something that only later you can establish in your met tests. The same goes for the nickel, especially. For the copper, you have it also. For the zinc con, you have bad and good con. So these are things you pick up maybe only after a while that you're in the industry. You say, there's a big difference in how easy you can subtract it and how clean it is and how much penalties you get, and etc. But I'm diverting from your question.
A little bit, but no, it was to the previous point. But yeah, the question was, how do you get exposure to it?
What I mentioned for cobalt, I'm the least favorite there. But if you have a discovery, that changes everything. So what I want to do is get to know the companies beforehand and then see if you have that drilling success. Be quick on the ball. Try to read it in the first day, week. Put some hours in there. Maybe try to call them. See if there's interviews out. Read about the peer groups, because often they, in the press release even or in the presentation, they say it looks like this deposit. So you can already start reading the feasibility study, or at least some of the charts and diagrams on how they developed that. So that's a very, well, one part that I look at. Be quick, be in the know, and write that, or shortly, or if you build your conviction, you can write it longer, hopefully, or it goes back down. That happens also a few times if they cannot, let's say, continue that success. What I won't do, and what Luc mentioned yesterday, is in the anticipation of a drill program, like Plenty here will drill in summer, and you think, it's going up 10-20%, maybe this is a leak, I will buy it also in the hype, and then results disappoint often, or at least the first holes. So yeah, then you're taking risks for nothing, I would say. I wrote Adriatic Metals, which is the first new mine in Europe in the last, I think, 40 years. In Bosnia, they even got a European bank development loan of, or not a loan, equity position of 40 million, I think it was, like 3-4 years ago. And the easy thing there is, if they approve it, and in this case it's the European Development Bank, so you know there's a lot of due diligence in there, it's way easier to close the rest of the financing for the mine, because you already have that buy-in from a European standard. So that was an easy call after that one to say, okay, now this project is really getting the lift because the European Union is behind this project. And even in this new plan, they're going to do that more and more. So I don't want to ride the whole circle. So my main focus is on the discoveries.
Okay, so if you look at the Lassonde curve, it's sort of like they make a discovery when it's peaked, and then when it starts coming down a little bit, that's sort of when you're looking for an entry point.
Yeah, when they start saying we will try to infill it, and you find the boundaries, and the METS work starts, and the studies start, it's just quite interesting, and then you have to do it, but maybe as an investor, it's not the moment to be there.
Okay. And Fabi, you're a known gambler, so you probably like the earlier part of the Lassonde curve, right?
Actually, I like companies that have some sort of resource out already. It doesn't need to be that they've drilled the hell out of the property, but I need to know that the chances of them finding something is, more than just, complete chance. And so I do usually prefer, early stage developers to late stage explorers. So a company that already knows that they have something in the ground, they may not know how large it is. That's, I guess, the sweet spot. When I go towards exploration, I usually like to look at companies that are in areas where there aren't, this is going to sound strange, but in uranium is going to make complete sense. are in areas where everybody else has delineated their deposits. So you have known resource all around the area, and there isn't much other exploration going on, but you know that their chances of success is high just because the area in and of itself is so rich with uranium. And uranium is very plentiful on Earth. You just have to get it, in a good jurisdiction, which doesn't exist. And you have to get it in decent grade, which is also dependent on many other factors. But for example, you take a look at Africa, right? So both Niger and Namibia, if you have exploration projects in those two areas, the chances of them finding uranium there is actually very high, depending on where they are. But the thing is the grade going to be economic? So I would rather make a bet whether the grade is going to be economic or not versus them finding something versus nothing. This is why, for me, the Athabasca Basin is, it's beautiful, but it could also be a zero. So you're risking just drilling, and finding absolutely nothing. But when you do find something, it's usually absolutely amazing. And if I devote part of my portfolio to those kind of plays, it's a small part of the portfolio because I don't like, that much risk. So I'm a light gambler.
All right. We've got about a minute here. Any examples that you can give me? I mean, Pete, you told me about Adriatic. They've sort of moved up higher to the Lausanne curve now. Something else that you're...
Well, maybe to come back, I also like to support good teams because even a good or a bad project, if you have bad management, it's tricky, but they can always fuck it up. With dilution or with a royalty or with a stream on it you don't like. They have 10 years before development to make some mistakes. So I try to find the good guys in the industry and follow them. As an example, well, this week, I will not say the name, but there was a pretty significant discovery in Australia in a very niche metal like niobium. And that's why you need a good network, because then you have connections and you hear about it. That's the first thing, of course, hear about it. If you have to wait till I tweet it, well, I try to tweet it as soon as possible, these things, but you have to find it then early if you play Discovery, so you need your channels. That's one I like at the moment, but maybe in 2 weeks when the next results are bad, yeah, then it stops and you go to the next one.
So in conclusion, people should follow you on Twitter.
Yeah, also. Yeah.
Good point. Are there any questions from the audience? Because we're sort of out of time. Anybody want to ask something? Dominic, please.
Yeah, you've touched on tin. I'd love to hear what the panelists think about tin.
I'm only just started to get in on tin and learning about it, so I'm not the best person to answer. Yeah. That would be him. I
gave a presentation here 2 years ago on tin, and that was still nicely at 20K, and I went to 40, 50, 60, 80, 90, maybe even. I don't remember. And then it fell like a brick. Yeah. And then I learned, and what people were saying before, it's such a niche metal. Small changes in supply demand can do a lot to these. Also, the Chinese with the inventory, they're not always open, so you don't know what's going on. They stockpile, and also the artisanal mining, even in Africa. Tin is expensive. We mine this. Then I heard a year later now that the price is back to below 20 even. The guys are just now going back to cobalt mining. So it's they want to survive, and I get it, and they just go for the highest grade and the highest pay. But I think still there is a good future in let's say applications. It's just the price has been insane, the movements. But what is
quite constrained as well, right?
The supply is you probably know, Dominic, but there are only a few countries supplying it. There's only one big that you can buy on the TSXV that is producing that, pretty ESG friendly. And what is maybe a critical point there is in all these niche metals, it's very good to have a low cost producer to withstand all these big swings. Because they still make money as the last one in the room, and then you choke off the other ones, and then prices go up a bit now, and they're the first one to make good cash flow again. So it's tough to ride it out, of course, but that's maybe the best risk version you can do there.
Great.
You might want to watch there was a research done by RTZ showing that of all these critical metals, tin had the most increase in terms of percentage in demand. You might want to look at there.
All right. If there are any more questions, feel free to harass them in the lobby. They're going to be there. And again, follow them on Twitter. They do good work. But we also have the largest the best producer of hot sauce in North America waiting to give a presentation. So Brandon, wouldn't you?
Yeah. So my favorite critical metal is also tungsten. And
Okay.
Brandon can take that
You're going to
away.
hear about it right now. Give it up for them, guys.